Good afternoon and welcome to the Denver Gold Forum afternoon session 3:10 start. Our first presenter this afternoon is K92. K92 has single-handedly shown the broader market companies with the right management approach and prospective asset can unlock value in Papua New Guinea. In 6 years, K92's share price has seen significant growth reflecting management and project success. To update us today, please welcome to the Denver Gold Forum, Managing Director, John Lewins.
Well, thanks for that, Chris, and good afternoon, everyone. So K92 Mining, a story about high grade and Papua New Guinea. No movement. So this is Papua New Guinea. It's a bit drier than you probably imagined, but yeah, so we're just up the mountain there and we get access in from the valley. Yep, or we can do this one instead. There we go. All right. So that bit says that you can't believe anything I say, so you can believe or not believe what I said about that other picture being part of Papua New Guinea. Yeah, I could leave this on for you all to read for the rest of the day, but it'd probably be a bit boring. So, K92 Mining, what we call a unique opportunity. Why? Rapid, fully funded production growth. We've undertaken several stages of expansion over the last few years and during COVID, where we doubled our throughput to 400,000 tonnes per annum in 2021, increased it a further 25% in 23. And now we're undertaking an expansion which will take us to 1.2 million tonnes per annum, building a brand new plant, expanding underground. And that'll take us to production of around 300,000 ounces a year. Having got the taste of expansion, we'll continue that into what we call stage 4, which will take us to about 1.7 to 1.8 million tonnes per annum and around the 450 to 500,000 ounces a year. Stage 3, start commissioning in 9 months' time, get up to full production in about a year's time, and then stage 4 in 26, 27. And we've done that on the back of a very significant resource growth. Over 1,100% increase in M&I and almost 800% increase in inferred resource between 2017 and 2023. And we've still got massive, extensive near resource growth potential via strike, depth extensions, plus a number of high priority, high grade vein systems nearby, which I'll go into a little bit more in the presentation. So this is very much a large, high grade tier 1 asset resource. High grade, low cost underground mine. Average grade since we started, 11 grams per ton. We've given 2024 outlook of 1440 to 1540 all-in sustaining cost. And that's as a result of a significant temporary increase in our development in sustaining costs to open the mine up for this major expansion. We've got a large land package which is apparently in elephant country. There'll be another one that they'll fact check and probably find out there are no elephants in Papua New Guinea, but that aside, it is very much elephant country. It's highly prospective for both high-grade vein systems and porphyry targets, and we got drilling underway on both. Main focus right now is on the high-grade Arakompa deposit, which we've got 4 rigs on, and we've accelerated that from 1 rig in January to now having 4 rigs on it, and I'll show you the results to show you why we're doing that. And that's all driven by an experienced team with a proven track record. So Papua New Guinea, I'm sure you're all extremely familiar with it. You've probably all visited. In case any of you are wondering, no, there aren't any headhunters in Papua New Guinea. Many gold hunters, but no headhunters. It is a country of 10 million people, 800 languages. It's incredibly diverse, and it also hosts some of the best mines in the world in Lihir, Porgera, Oktedi, and of course K92 being the jewel in the crown as we see it. K92, as you can see there, we are about 200 kilometers up the road from the city of Lae, which is also the largest port in Papua New Guinea, and that's up a sealed road. So the mine itself sits about 6 kilometers off the sealed road coming from the largest port. We are in the Markham Valley, so we're not in the highlands, and it's a relatively low rainfall area, only about 2 meters of rain a year, as opposed to 8 meters up in Porgera or 10 meters in Oktedi. So it's part of almost a desert in Papua New Guinea. So if we look at the mine geology, May 2017 was when we made our discovery, what we called the Kora North discovery, where we drilled a hole looking for what we believed would be the Kora North deposit from underground. So we drilled from around 600-700 meters underground, and at 100 meters almost exactly we hit 5.4 meters, 11.7 grams per ton gold, 25 grams per ton silver, and 1.3% copper. And amazingly enough, it was almost exactly where the geologists projected it would be if they were correct. Fast forward to October 21 for Kora, December 21, and you can see that resource has grown significantly. There it was sitting around a total of about 5.5 million ounces with a Rumafimpa as well. And then 2 years later, expanded further, now to over 7 million ounces, having mined about 600,000. So total in this deposit around the 7.7 million ounces. And as you'll see, we've got drilling outside of that resource, which would further expand it right now. So when we look at high-grade mines and we look at specifically underground assets, you'll see that K92 is one of the highest in the world, with one of the lowest cutoffs at 3 gram cutoff. We're running at about 9.1 grams per ton, 7.6 million ounces total endowment. So what we've done is systematically executed a series of expansions which are taking us to a tier 1 mid-tier producer status. As I mentioned, stage 2, 400,000, stage 2A, 500,000 tons per annum, stage 3 that we're busy with right now, taking us to 1.2 million tons per annum. That's about a $210 million spend to achieve that. And then stage 4, which is a relatively small expenditure of around 20 million to then take us to around 470,000 ounces, 1.7 million tons per annum. Importantly, fully financed. So, in fact, this quarter will probably end up with more money, more cash at the end of the quarter than we started with at the beginning of the quarter, which is obviously due to good production, but also a fairly decent gold price. So, our operational guidance for 2024 is 120 to 140,000 ounces. Cash cost of $820 to $880, all-in sustaining $1440 to $1540. We'll spend, we've got 17 to 20 million was our guidance. We'll probably be above 20 million because we are really focused on Arakompa and putting up more rigs up there. Growth capital, 145 to 160 will probably come in at the bottom end of that. And then 2025, another 40 to 50 million in growth capital. Second half of the year is expected to be stronger than the first half of the year. And despite the fact that we had a couple of hiccups at the beginning of the year, we are well on track at this point in time to achieve our guidance for the year. You'll note that the all-in sustaining costs are particularly high this year. This is a big year for us in terms of all the development that we're doing to open the mine up to go from 600,000 tons per annum of ore to 1.2 million tons per annum of ore by the end of next year. And a lot of that, it goes into sustaining capital, and one can argue about whether that should be sustaining or expansion capital. This is the way that we've put it together within our study, and it does have some tax advantages in being sustaining rather than expansion. Important point when we look at the tons that we have to move. If we look at 2024, we're going to mine about 1.5 million tons, of which around just under 600,000 are actually ore. So we got a very high ratio. It's about a 2-to-1 ratio of waste to ore. However, over life of mine in stage 3 and stage 4, that ratio reverses, and you're doing more than 2 tons of ore to every ton of waste. So although we're talking about big increases in terms of the total tons of ore that we mine, in terms of total tons mined, to get to stage 3 from where we are today is maybe a couple 100,000 tons per annum more, and then it's another 400,000 tons per annum to go to the stage 4. We see a significant cost reduction as we get into stage 3. As you can see, our costs have went up especially our all-in sustaining costs in 23-24, because we've been putting in a lot more development meters in those years and moving a lot more waste than we do in the latter years. As we come into our stage 3, we're coming into sub $600 an ounce all-in sustaining cost, and that is, and then dropping down to 444. If we look at it in terms of gold equivalent ounces, we're sub 600 at stage 3 and sub 500 in stage 4. So in terms of the expansion, we're using GR Engineering Services to do the plant. We spent or committed around 58% of the cost. It is a lump sum fixed price contract for the construction of the plant, and it makes up around 100 million of the total of 210 million that we forecast for the project. The second biggest item would be the paste fill plant, and then it's a series of other infrastructure areas that we're upgrading. This is a recent picture of the site. You can see our existing plant is sitting there on the left-hand side, and then the new plant with the civil works is over 50% complete, and we've just mobilized the mechanical installation contract at the site. In August, we had both the ball mill and the SAG mill delivered to site. These were long lead items. We ordered them well in advance, and then found that post the COVID rush, deliveries have improved dramatically. So we've actually got these earlier than we thought we would. We've also got all the other long lead items, such as the float cells, thickeners, etc., etc. I think the crusher is due on site shortly. As I mentioned, the paste fill plant is the next highest expenditure. Long lead items for that have already been ordered. We've pretty much completed the front-end engineering and design, and the construction contract will be awarded shortly. We've been out on tender to that, meaning to keep the guy we think we're going to give it to honest. So in terms of transforming this mine from 600,000 tons per annum to 1.2 million tons per annum ore treatment, a number of elements we put in. First of all, there's a twin incline. So the twin incline we put in, you can see down the bottom, is a 5 by 5.5 and a 6 by 6.5. That will allow this mine to move up to and beyond 5 million tons per annum. It's at the bottom of, or pretty close to the bottom of the known ore body, although the ore body, as I mentioned, is open at depth, and every single hole we've drilled at depth has shown it continues. So that will allow us to move material more quickly, more efficiently, and at lower cost. In order to be able to utilize that, of course, there's the ore pass system. The ore pass system involves us putting in a series of raises. We've actually just completed the first raise. using our own raise borer and a contractor to operate it. So we put the first one in, a 5-meter diameter, 260 meters, and we've got another 4 that we're going to be putting in over the next 18 months. And that will allow us to move all of our ore and waste down to that high-speed development. Third is the Puma Vent Incline. The Puma Vent Incline provides us our long-term ventilation for life of mine. That will be completed in the first half of 2025, and that gives us life of mine ventilation, putting in 2 megawatt variable speed fans. And then the fourth element is paste fill. Paste fill will be commissioning about 3 months after the main plant. So in terms of that twin incline, on the left you can see the existing incline, which we acquired when we acquired the mine, 4 by 4.5, not the best, a classic contractor effort. And on the right-hand side is our new twin incline, which will allow us to move up to 70-ton trucks at about 40 kilometers an hour, and they'll be running all the way down to the plant and taking our ore straight to the plant. So it'll stop our double handling of our ore. In terms of the ore pass, as I mentioned, we've just completed our first raise. You can see there that's a 5-meter diameter that we've put in, about 260, 270 meters. We actually did it about 8 meters per day, which was actually faster than we had allowed, and we're just about to start our second. In terms of the mining fronts themselves, we currently operate a modified Avoca until we get our paste fill in. So we're currently operating one mining front. We're about to start a second because we've now developed the decline down to 1070 level. So we're about to start our second mining front. At the same time, we have been accessing ore from the twin incline, and we're about to start our development along ore at that level as well. We've actually taken the first ore out around where the twin incline is. So you can see that we've been mining up to 600,000 tons per annum from one mining front. There's actually 3 mining fronts that will be coming in by the end of this year, early next year. And then with the paste fill, it allows us to go bottom up or top down. So that increases the number of mining fronts that we can have. Just talking about the high priority near mine targets. Obviously, we've got Kora Deeps, so that's going deeper than you currently saw the resource. We've got Kora South, Judd South, so continuing that to the south, and we've when we moved from the 5 to the 7 million ounces, most of that was actually by taking the resource further to the south, and it remains open at the south. We've got Judd and Judd Deep, so that's taking the Judd deposit deeper. And then we've got Karempe, which is a parallel vein system that we're actually drilling underground right now. Maniape, Arakompa, as I mentioned, we've got 4 rigs on Arakompa right now. We'll start drilling at Maniape next year. Both of those resources have historical resources. Both of those projects have historical resources, but haven't been drilled for over 30 years. And then we got the A1 porphyry. Just looking at the Kora targets, you can see where we've already got quite a number of holes outside of Kora going to the south, and so that obviously will expand the resource. Same for Judd. We're not only expanding, but filling in the gaps within the mining lease.
John, we've got a minute to go, please. Okay,
thank you. Important point, as we go further to the south, you can see that our copper grades are increasing. So the average within the resource at present is 1%, but as you can see, we're going up to 3% in some of those areas. Finally, just closing with Arakompa. Historically, there was a resource sitting there, 798,000 ounces at 9 grams per ton. We started drilling there earlier this year. As you can see, we've got multiple high-grade intersections, including 3.7 meters at 42, 6.7 at 14, 12.6 at 20, 7.2 at 24, and surrounding that lower grade, where we've got over almost 100 meters at 3 grams per ton. That's the reason that we got 4 rigs drilling that right now. It's got a 1.7 kilometer strike length. We've just started our first holes that are a stepper at 250 meters. So that has got us really excited, and that potentially is our next Kora Judd. And as you can see, it's actually closer to our plant than Kora and Judd is, and it's a similar thing. We're going into the side of the mountain and up into it. And with that, I'll say thanks, because it says 0.
Thanks for a very exciting